Hi, this is Paul from globaltradingsoftware.com, and this is a trade management strategy stroke futures trading strategy. So just had a meeting with my developer about the next automated trading system that we're going to provide, and it surrounds itself around this Range Breakout Trading Indicator that we've got. And one of the big talking points is the different trade management strategies that you can have with this. And we've got three options, and one of the options I want to talk about today is the conservative option, using the manager to manage the trades. Talk about the rules. So those users that have got this trading indicator, the range breakout and the manager, can actually use these rules that we've agreed on for the automated trading version of this to trade this automatically. So this is the conservative trade management strategy that looks for those runners and maximizes the profits. You know, some of the other strategies will be set in profit targets with ticks and things like that, but this one looks for runners, and this is how it's going to work. So I'm going to replay today's gold pit open. As you can see, this is the opening range candle here on the 5 minute. We've defined that range, the software has defined that range as red, it's bearish. We've got some great confirmation from the BIAS Depth Heatmap, that's 6 time frames going up from this 5 minute, all saying red, bearish. That's good. One of the things that we look for as well is the ribbon on the manager, which is 4 candles in advance, is already red before we take in the trade. So if this instance happens, we can say we want to look at that conservative trade management strategy. So I want to play this through slowly, because at this point here we don't trigger the trade look. You see how we go back up, and we're going to go back up and test that European opening range. But again, it's not just about that first 5 minutes, it's continual trading opportunities through that opening range. Look what happens. We start to come back down, and the range, the New York gold pit open range defined here, is now red. We're bearish. Look at the BIAS Depth Heatmap. We're 4 out of 6 in the red as well. This is looking good. Let's play this forward a little bit more. Also note now, we're into this range. Look at the ribbon for the manager. It's red. So if we are going to trade this, we're going to put a couple of ticks below. Look left, look at this pivot here. Actually, we want to be going just below there. That's going to be our entry short at that point. Okay, so right now we're getting ready. We know we're going to manage this conservatively. We know this is the standard entry. We just need a little bit more help from this BIAS Depth Heatmap. So we've got another candle, and there it goes, straight through the entry. Again, we've got the bias of the range as red. So this is the short we're looking at. Let's play this forward now. Remember, we're using the manager ribbon to manage this trade. When it turns green, we get out. Okay. The initial stop for this, by the way, is just above that opening range. That's the stop. Okay. So the risk here, let's have a look at the risk, is 38 ticks. Okay, so let's play this forward. Come back up to test the top of that range. Doesn't take out. We're coming down. Look how the ribbon never changes from red to green. We're moving forward. Now we have the big drop. Okay, let's play this forward slowly. Remember, when we're going to be programming this as an automated trading strategy, we're looking for a crossover from red to green, okay, to take the profit. This way it maximizes the profit. Play this forward. You see how the ribbon's getting closer together now? We do have a quite strong bullish candle with higher than average volume there. There. We change to green at that point there. So let's measure that profit. At this point here, 102 ticks. So we risked 38 ticks to win 102 ticks. That's $1,000. We worked that out as a risk to reward. Let's have a look at that. So there's our stop, there's our entry, our risk to reward was 1 to 2.5. Fantastic risk to reward there. But what I wanted to really reiterate was the use of the manager to help us deciding on that trade management strategy right from the offset. So when it's already red, and we're breaking out to the short, remember the bias is short, we've got that backup from the BIAS Depth Heatmap, we're going short. And we don't get out of this trade until this turns green. It doesn't turn green on this pullback, it comes back down, and we end up taking around about 100 ticks when that ribbon turns green. So again, our automated trading version of this will not be out for at least another 3 or 4 months because we need to build it, we need to test it. But if you've got this trading indicator suites, if you like, if you've got the range breakout, the manager and the BIAS Depth Heatmap, you can trade this manually using those simple rules to maximize those profits with this conservative trade management strategy that looks to really grab hold of those runners. Really great. The links are below this description for the BIAS Depth Heatmap, the range breakout trading indicator, and the manager. Hopefully that helps. Speak to you all really soon.